mortgage rates are forward looking. And so a lot of times that rate cut is already built in to the mortgage rates.
Right.
Hey there, everyone. Jamie with Self 1% Realtors, joined by the brokerage here, Dave Barlow and Jaysen Barlow, and joined by Rich Cercone at Equitable Finance to talk a little bit about these recent rate drops and what's going on the market. Rich, what do you got for us?
Hey guys, how are you? Thanks for having me.
Doing good.
Well, I mean, we continue to get positive news on interest rates. The 10-year Treasury bond, which is something that's loosely tied to mortgage rates, we were at 4.7 on a yield on that, 4.6, 4.7, not that long ago, less than a month ago, and we're now at 4.18. So that's been a big move down in that yield. Now, we haven't seen mortgage rates follow in lockstep. We've seen rates come down, but we haven't seen them dramatically come down. We're pretty much solidly in the 6 range on most scenarios for loans. People with normal, pretty good credit and a down payment, you're going to be in the 6s. Government loans like FHA and VA and USDA, those loans are in the low 6s. Sometimes you might even be able to put a 5 in front of it on those loans. But for the most part, conventional loans are going to be in the 6.6 to 6.8 range for most scenarios. So that's where we are. Now, I did see this morning on CNBC, this is, what is this? This is July the 18th. I saw one of the former Fed vice chairman was being interviewed, and he's been pretty hawkish in the past. And he came out and said that he's pretty sure we're going to see a rate cut in September. So the markets are now looking for a rate cut in September. And from where I sit, I haven't seen mortgage rates come down as much as I would have thought they would have, given the fact that the market is expecting a September rate cut. Typically, we would see a more dramatic fall. So why that is, I can get into all kind of theories, but I won't bother to bore people on that here. But the good news is we were in the high 7s a year ago. We're in the high 6s right now, a point lower. Go out and get that house. They're out there.
Yep, 6.8 is my rate when I bought back a foreclosure back in like 2010 or whatever it was. So I had a buddy ask me the other day, well, what are rates at? And I was like, well, I'm about mid 6s. And he was like, oh man, he's at 3% or whatever. He's one of those online talking about never going to move. And it's like, no, 6.8 is not that bad. They need to come back into balance some more. But I think with one turn of his head, Donald Trump not only saved his life, but he saved the entire real estate market. I mean, stock market has exploded. The market's reacted, as if they're seeing a win from him coming now. So hopefully we'll see rates. I'm hoping, Rich, that instead of the dramatic fall, that we'll see him continue in August to keep trickling down as the market gets closer to that rate cut, that we'll start pricing in more because we did not have the dramatic fall.
Yeah, I hope that's the case.
So the next Fed meeting is here at the end of July. July.
I don't have that date in front of me, Dave, but I know there is a Fed meeting still in July at some point.
Yeah,
possibly next week.
Yeah, take my word for it. It's the end of July. But there's not a meeting in August, which I think is typical of the Fed to take the month of August off. And then there'll be a meeting in the middle of September, which is where you think, and what you're hearing, that there will be a mortgage, or not a mortgage, but a rate cut of the overnight prime.
Right. And, and Trump is saying that the Fed at this point should stay out of the way and not try to manipulate the election. But, there's quite a bit of talk that they will do a lower in September. Now, that doesn't mean that when they lower rates in September that mortgage rates are going to drop in lockstep. That's not necessarily the case. Sometimes if they would lower rates in September and signal that maybe this is the only rate cut they're going to have, mortgage rates could go up on that very day. So the folks shouldn't be sitting around waiting for them to lower rates in September. That has no direct correlation to what rates on your mortgage might be.
Well, and I think we've talked
Given the
into it
factors.
now. Yeah, get into the market now.
We've talked about this quite a bit, that mortgage rates are forward-looking. And so a lot of times that rate cut is already built in to the mortgage rates.
Right. Yeah. At this point, they are building it in. I mean, the markets are expecting it, and we've seen rates come down a point from last summer. So, you know, the only way we get more wind at our sails to lower rates even further would be something indicating to the markets the Fed is going to continue to lower rates in 2025. That's what would really help mortgage rates right now. And I don't think anybody knows that at this point, with the new regime possibly coming into the presidency and all the things that that entails. So there's too many factors to determine what will happen in 2025 at this point.
And then, you know, not to get into all the craziness, but like, you know, you got like what's Japan and China with how many, you know, treasury notes they hold, and they're trying to now unload them because they're going through their, you know, there's a lot of dynamics. I mean, what I'm telling my sellers is, you kind of, you said, Rich, it's like get in the market now. The market's going to start to price this in, and we don't really know for sure what they're going to do in September. You know, odds are, 80% chance right now they're going to cut rates. So things are looking good. If they don't cut rates, you're going to be really pissed you waited, because if you list in September and October and rates, everything goes stagnant until election time. If rates do get cut, I think we're going to just cruise right through until the regime change, if there is one. So I'm hoping for it, man, because the things are kind of picking up, and hopefully it'll coast us through fall and into the winter market.
I think what you guys have told me, there's good inventory out there for the folks to look at too, right?
There's some selection
comparatively.
Don't know how much of it's good inventory, but there's selection now.
Yeah, there's at least a selection, and you might be able to think a minute before you buy, before you make an offer. So, you know, it's a good time.
One thing I would like to explore, I mean, we'll do it in a different video, Rich, is to look at the conventional mortgage rates versus the FHA mortgage rates. And, you know, the differences, I mean, obviously you're saying about 6.6 or thereabouts for conventional, but low sixes, maybe even high fives for a FHA loan. And I think that's something we should talk a little more about, because a lot of people don't realize that there's different types of loans out there that they can take advantage of.
Right. That would be another video, but just briefly to say that the FHA rates are lower, but the cost of the FHA loan is higher. You have an upfront cost for PMI. There's an upfront mortgage insurance that you pay. 1.75% of your loan is paid up front. So that's a cost that you have to deal with. And then if you have PMI, or in the case of FHA, it's called MI, or mortgage insurance, it's a 30-year situation with FHA. It never drops off your loan unless you put more than 10% down. So you have lifetime PMI monthly plus a large MI cost up front. So that's the reason that in general, even though it's a slightly higher rate, the conventional is usually a better deal.
All right. Jay Marinsky, you've been kind of quiet. You give us the outro and take us on home.
Rich, Jay, Dave, appreciate all the info, all your guys' insights here. Like you guys are saying, I don't think that there is a huge reason to wait with inventory. Buyers have a lot of selection out there, and homes are still selling on pace here. Actually, over pace, it looks like, from our numbers. So if you guys have any questions about buying or selling, give any one of us a call. Our information should be on the screen. Be happy to help you guys. So the guys from Sell for 1% bidding you a good rest of your summer. We'll be back soon.
Thank you, guys.